start the meeting. Right, thanks very much.
Sorry, I just need to
Okay.
Okay, so welcome to the Investment Subcommittee of 28th of July. Our first item of business is election of chairman. Can I have nomination?
Thank you. Can I propose Mr. Barclay?
Perfect. And a nomination and a seconder? Perfect. Yeah. There you go.
Thank you. The next item is the minutes of the meeting held on the 31st of March 2021. I propose the minutes of the meeting held on the 31st of March are taken as read, confirmed and signed. Is everyone in agreement? Yeah. Okay, that's unanimous. Question time. I've received no questions. Questions asked by members under Standing Order 7.3 and 7.5. There are none. To advise of any other items which the Chairman has decided to take as urgent elsewhere on the agenda. We are going to rearrange the agenda so that we're going to take item 8 and move on and make the decisions and then go back into public session to do item 7. So I think we will do that. We will take the decisions while Mr. Clark is here. So the next item that we have is declarations of any interest in respect of the items on the agenda. Unless we have some extremely rich people here, I can't imagine that there would be, but I've got... All right. So we, as I say, we're going to go take item 8. So the next two items we will discuss the content of both public papers before going to private session to discuss any supplementary information. We will then be joined by representatives from LGPS Central. So, moving on to item 8. So, recommended investments in LGPS Central and Partners private debt products as set out page 15 to 20 of the agenda. Bhulesh, could I ask you to introduce this, please?
Thank you, Chair. So, the purpose of this report is a recommended investment into the Central Private Debt 2021 vintage and also the Partners Group Multi-Asset Credit 6 Fund. So there's two separate investments here. The Central offering is new and the Partners offering is a continuation of a product that we've invested in numerous times. I think it's listed point 23 of the paper. So we have invested in previous iterations of the multi-asset credit fund in 2014, 2016, 2017 and most recently 2019 and the process is largely the same. We do have a paper from Hymans which we will go through in due course, which provides assurance on both investments. That's the Central product and the Partners product. Just a quick recap that, you know, private debt is the name given to the asset class where money is loaned to companies that are not originated from the bank. We've had a bit of training just previously, so hopefully that's well understood now. Both products are at the lower end of returns available in this asset class. So the Central product is looking for circa 6 to 8% net after all costs, and the Partners product is similar, which is cash, which is virtually negligible now, plus 4 to 6%. I propose we move to the next product, unless there's any questions at this stage.
No, nobody's got, no.
Okay.
So, the next item is the recommended investment in LGPS Central Infrastructure Fund as set out on pages 21-28. Declan, could I ask you please to introduce this item?
Thank you, Chair. I'll just give a very quick introduction because similar to the private debt, Hymans will do an introduction in the private session. We can go into a bit more detail then. So this is the cover paper is really just teeing up a potential investment in a LGPS Central infrastructure product, which in truth is a similar nature to some of the infrastructure investments the fund already have. So it should be hopefully fairly sort of familiar in the type of aims and objectives of this product. So I won't go into any detail now, but happy to take any questions if there are any.
So you've all read the paper, the initial paper, and we're going to go into private session for briefing on the items. Has anybody got any questions? No, not at this stage. No. Okay. So, I've not been informed of any urgent items, so I'll move that in accordance with the Local Government Act 1972, the public be excluded from the meeting for the remaining items of business on the grounds that they involve the likely disclosure of exempt information. We now.
I'm just going to see if we can get it.
All right. Okay. I think we've got just a little bit of a technical issue, so to feedback the live stream.
You might as well go ahead if it's...
Okay, so we're going to now deal with the strategic asset allocation update and cash deployment plans as reported on pages 9 to 14 of the report. So, Bhulesh, could I ask you to introduce this item? This is probably the most straightforward of any of the items today, I think.
Yeah, there's no decision involved, so it is just an update. So the purpose is to update the committee on our plans for the rest of 2021. So Hymans, the Fund's actuary, completed the annual 2021 strategic asset allocation, and we approved that at committee in January. We have over the next 12 months got a number of products that we need to look at. We've looked at two today already, so point 4 on that paper there is the Central Infrastructure Fund and the private debt vintage. We've also got a private equity vintage in the pipeline with Central. We've also got a direct property fund in the pipeline over the next 12 months and a targeted return fund. The idea being here is that we've got opportunities to put money away, and the rest of this paper kind of talks through what we plan to do with our growing cash holdings. So point 6 looks at a quick overview of what the strategic asset allocation looks like and their target weight. So you can see there on that table we've got growth that should have a 55% weighting. That includes most of our equities and targeted return fund. Income should represent about 37%, and that represents infrastructure, property, emerging market debt, the private credit we've just talked about as well, and some liquid sub-investment grade credit, which is something that we approved earlier in the year. And the last section on there is the protection assets, circa 8%, and that's mainly made up of investment grade credit, so the safest stuff, and inflation-linked bonds. So what do we have currently? So we've got, we had, as at the 31st of March, 170 million in cash, or 3% of the total fund assets. And at the latest count at the end of June, that had grown to about 220 million. The reason that it has grown is shown in point 8 in the table, but largely due to the fact that our fund is cash flow positive, in that we pay out less to pensioners than we collect in contributions. We also have a number of investments which are mature and are throwing cash back at us. And that's what that table in point 8 tries to do there. It says we went from 170 to 220, and these are the kind of cash flows that we experienced in that time. Turning the page over, we've got point 10, which is a table that aims to show us what we intend to do between now and the end of the year. So we've got a number of columns there. We've got the fourth column across, difference actual to 2021 SAA, which shows how far we are currently to the target that we approved in January. And you can see here that the growth assets are largely ahead of target, and the income assets in the second box down are largely behind. So you can see infrastructure minus 2.4, private debt minus 3.1, property minus 2.4, etc. So our mismatch is within the growth section, which is largely liquid and we can sell quite easily, and the income section where it's largely illiquid and it's hard to get money away. So we've tried to address a couple of those points today with the two investments that the committee have approved. And we're just going to talk through a couple more here. So the first point on here was point 13, central infrastructure. I think we can almost bypass that now, given that this paper was due to be first, and we've talked about that. The second point, point 14, is central's private debt and partners group. One of the points that we didn't bring out clearly through the meeting was that the partners group investment is likely to be called next quarter. So that whole 60 million is likely to get invested almost straight away. So that brings us up a bit straight away. We've got, and not only does it bring the allocation closer to target, it gets 60 million pounds off our books pretty much straight away as well. Private equity, there is an offer from Central to be developed, and we think we'll bring that to the October ISC. Although we think that we'll need about 30 to 40 million just to maintain vintage diversification. We don't want to be in a place where we put no money in certain years and lots of money in other years. This investment's likely to be cash flow neutral, in that we are getting money back from our mature Adam Street portfolio, and this will just replace it. So this shouldn't really decrease our holdings too much. Early next year, Central aim to have a property fund ready. We are underweight there as well. Again, it's in the income bucket and the illiquid side. It should reduce some of our cash holdings. Alongside that, we've spoke to one of our existing managers, LaSalle, and we've committed some money, 35 million, that they aim to get away by the end of the year also. So that should decrease our cash holdings and close that gap to target allocation. The last one on here is targeted return. So we've got a holding in targeted return. It's within the growth allocation. Central are developing a product, and we think that's going to be early 2022. Downside of this is that we're overweight targeted return, so when we do finally make this switch, or if it's approved, we'll probably have a bit of money flow back to the fund. I think the summary to all of this is that we expect by the end of 2021 to reduce our 220 million closer to 100 million. And that should be a bit more palatable, I think, given our high cash holdings at the moment. It may feel like we've overcommitted. You know, we've just done 160, and we've talked about the private debt. But the timing means that we'll have plenty of cash on hand, so we shouldn't be out of cash at any point.
Okay, so thanks for that explanation. Yeah, you're right. I suppose because of cash flow and everything else, we haven't overcommitted this morning at all. You know, very, very simple point. I suppose the reality of it is we're paying out less in pensions and we're getting an income, which tends to add to our cash balances, which, from my point of view, that's got to be a positive, hasn't it? Yeah.
Sorry, just on that point, it's really key because it does change your behaviours of the fund. If you know that month in, month out, you're going to have to sell things, it does push you more to having liquid holdings than illiquid. So it does mean you can make clean investment decisions. But it is worth noting not every fund's in that position. So if you talk to different funds, even within the pool, quite a lot of cash flow negative now.
Yeah. And I suppose the position of the different funds within the pool and their position will overall influence the whole fund, won't it? It will. It's got to. But we're in a happy position, whereas other funds may not be, or other authorities who invest in it. Is there anything else that anybody wants to bring out? I think it's quite clear what Bhulesh has said. You happy with that? So everybody's happy. So we're just asked to note this report, which everybody is happy to do. Yeah. Okay, so that concludes the meeting. The next meeting we have is on the 13th of October 2021 at 2 o'clock. Thanks for your attendance.
Sorry, 10
Sorry?
That must be a mistake. It's 10
Oh,
a.m.
Kat's made a mistake. We will reprimand her later. It's at 10 o'clock, means I've got to get up early. Yeah, that's fine. So it's 10 o'clock, 13th of October. Thanks everybody. And thanks for all your input. It certainly clarified a lot. And I think I've learned something, even if you haven't. Okay, thanks.